All right. Let's try this again. I'm going to do another recording. See if it works in the codec and the YouTube and all that kind of stuff. See if the video gets a little bit better this time. And if my computer isn't overtaxed. So let's take a look at this here. First thing I'm going to do, there's some other videos I'll have that will have a little bit better audio and dialogue, but they have terrible video, so here you go. Alright, the first question that I'm asking is, how can you put a price on security? Let's examine the history and predict the future of the Ethereum blockchain. Well, really my other material presents this better, but this is an example of the 2016 history of Ethereum, December, January, February, all the way through February. All the way through February of 2017. I do a little video on this here, and you can see the prices start to escalate quite substantially in millions of dollars. $270 million right there, the most in blockchain history in one single month. And this is February, this little orange bit right here, which is 13 million. And it goes from 13 to 35 to 55 to 170 to 270 to 100. This is the orange sliver here, and here's the orange sliver relative to the rest of the year. So you can kind of see there's a bit of change. Here's May 2017, here's June 2017. It's more than half of the entirety of all Ethereum was spent on blockchain security in those 2 months. And as mentioned, the most in blockchain world history right there. This graph is good. I don't have this anywhere else. This does make it bigger. Yeah, that's quite good to read. So this is the little green bar right there that I'm pointing to is the inflation graph that I'm kind of, let's see if I can't get it to stay big, but if I move the mouse around. But you can kind of see where it's near the blue line right now, which is close to Dash and Litecoin, which is kind of where Ethereum should have been relative to the size of the others when it set this metric into place. And then that orange line is Bitcoin there. And one thing that just so many people do not know, and it's pretty awesome, but you know, you and I now know this now, ha 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 ha. But so you can see where that little orange bar on the far left goes from 8.5% to 4%. Well, that coincides with the big boom in the value of Bitcoin. When the inflation rate dropped significantly, there was a major boom in the value of Bitcoin. Now, I just noticed, and you know, that's okay, but I'm off by a year on my little graph here, but all the same, I'm off by about 7 months on my little graph there, but it's okay. But yeah, so as the rate of inflation for Bitcoin, I can't point to it on the screen, but yeah, as the rate of inflation of Bitcoin in June 2016, the costs of Bitcoin get cut in half, and then a few months after that, you have just this climactic rise in the Bitcoin price. And Ethereum, I'm requesting that they do a kind of similar type of behavior now that they are on a size that is somewhat comparable to Bitcoin. So, but I suggest 2% is even better. But moving on, I just wanted to leave this little graph up there and go over a little bit about how Bitcoin dropped substantially, and then you saw the price change. And I predict that for several years to come, Bitcoin's price won't change substantially. About 2,400, somewhere in there. And then 3-4 years from now, if it's still relevant, which I kind of don't think it will be, but 3-4 years from now, it will jump up again, hugely. and people will wonder why. But it's because their costs got cut in half. That's the reason, people. Okay, and then let's see if there's anything substantial here. Okay, yeah, I just wanted a little bit of math here. I talked about where if you take an 11, if you take one, okay, if you take a number such as 2.2, but if you take 1 and multiply it by 1,000, that's the same as 5 by 200. So these 11% inflation are 1 ETH here and 5 ETH there, but effectively 2.2 times 1,000 is the same as 11.6, or 5 times more, times 200. They both give you a total spending of $2.2 billion. Whereas if you keep it fixed at a 5 ETH, or 11.6%, then that equals total spending of $11 billion, or just a ridiculous amount, and Litecoin spent about 200. So okay, so that's all for this little bit here. Some good little stuff. I'm going to close this out and then go to scene number 2. Okay, it seems like my computer has kept up so far. That's great. All right. I hope you people don't mind too much. I'm going to just kind of read some of this, but of course you can feel free to read along. Okay, let's discuss price stabilization. In a market-traded asset, price is stabilized when the number of buyers equals the amount of sellers. Put simply, if one adds a buy order to a stable market, the price necessarily goes up. Or if you add a sell order, the price necessarily goes down. This is 100% mathematically required, regardless of personal sentiments. Mathematics drives the market. So, that is to say that movements in the market are relative to supply and demand. That might seem kind of simple or straightforward for a lot of people, but sometimes that creates confusion to others who think that it's completely mystical. Okay, my second point. Let us discuss fair value of security. There are 3 things to consider within this context. Systems are attacked at times of least security, not most. In a market, there are many players, 99% of which have a history of infallible security. And 3, payment to defense contractors should not grossly exceed the known or theorized ability of attack. Okay, got that understood? Let's begin. First question you must solve is how much hash security is necessary to purchase or protect your blockchain. This is the ways that blockchains are. One, there's so many ways that blockchains could, in theory, be attacked, but the only acceptable computer method to attack a blockchain is hash security that I know of. But anyways, so hash security is the thing that you actually pay for protection. However, so the only thing I want to emphasize for just 1 second is that you purchase hash security to protect your blockchain. There are many other ways that you can attack a blockchain. Protecting it from hash security is not the only thing that a blockchain needs to get protected from. It just so happens to be the only thing you purchase security for. So spending trillions of dollars protecting a blockchain from this one area of attack does not mean it's significantly better protected than spending, let's say, $250 million, because once you cross over the let's say $250 million threshold, then there's cheaper ways than using a hash attack to subdue a blockchain, or $1 billion threshold. You know, there's some threshold to where a blockchain becomes vulnerable from other areas of attack. Okay, but hash security is the one that's that blockchains kind of default purchase security for. Okay, without going into detail, hash security does nothing to speed or send transactions along. It is purchased and disregarded immediately after use. The only purpose of purchasing hash security is to prevent a 51% attack within that very moment. Blockchains of $20 million annually expenditure or less have been known to be attacked. There is no history of a blockchain spending more than $20 million annually to have been attacked. Below, I list the values of blockchain security on the annual basis. Complete the space with which you consider to be the minimum desired level for the Ethereum blockchain. So in here, I have some listed values. You're not 100% secure if you spend less than 20 million annually. This is the largest known size of an attack that people know of. I think that's about right. The largest blockchain that's ever been attacked spent less than $20 million defending it. Most blockchains spend 12 million, however. They just count on the idea that they're not really going to get attacked because it's just not a profitable behavior. Regardless, you just both lose money and lose popularity when you do it. 999 other blockchains spend less than $100 million. I just didn't list them, but they all spend that amount or less. They really have to. Their worth is less than 100 million, thus they clearly spend less than 100 million. Anyways, moving on. Ethereum in 2016 spent 106 million. Dash is spending 132 million now. Litecoin is spending about 240 million now. So based on this information, how much would you decide to spend defending the Ethereum blockchain from the hash attack? 20 million is the largest known attacker that's ever occurred, and 100 million is safe for virtually everyone else. And then the most expensive person, Litecoin, is spending 240 billion, but maybe we say we want to spend $500 million. So then once you decide that, you must take this minimum value, double it, and come up with an acceptable range. And therefore you get the I desire to spend between 500 million and $1 billion to protect Ethereum from the hash attack. Lastly, while you may find this perturbing, it is an important part of the discussion in order to eliminate some forms of delusional style thinking. What do you believe Ethereum will be worth in 2025? So you just have to take a guess on this. It's not really relevant. But if you wanted to actually speculate as to what Ethereum might be worth in 2025, I mean, whatever, you just take some wild guess, doesn't really matter, but let's just pretend it's $5,000. I don't know. So great. Okay, using that dollar figure, okay, so now you come up with the number of $5,000. Okay, using that dollar value, the percentage you suggest, which should be paid for hash security in 2025, comes out to 0.1%. This is with a $5,000 figure. So the main thing I want to say here is that based on this number, which is quite a large number, you can arrive at that number using 0.1% of 5,000, and it gives you that number, versus Ethereum at the price it is today, that would equal 2.2% to purchase $5 million of hash security at the 250 price. Or it could be 2.6 at the $200 price, or to be a little bit more interesting here, back when in 2016 or whatever is the $50 price. So that's roughly what Ethereum was during 2016. So I just want to kind of, well, that's for 500. Let's see. No, I mean, it's so much less. So to get the Ethereum number, you have to have an average price of about $9.50. So okay, so this excellently proves the point. But to arrive at this number here, what Ethereum did for 16, you have to have an average value of $10, which is what Ethereum had as an average for 2016. Now to get at a $500 million figure, 5 times bigger, you need a value of $250, which is, this is what I recommend, this percentage to arrive at 500 million, which is 1 ETH per block. That's what I recommend. But now, just for talking purposes, if you took a wild guess of $5,000, then it'd come out to 0.1%. Okay. So effectively, this can be And the main reason I bring this up is because a lot of people think the percentage should be fixed rather than the amount you spend. A lot of people feel this way. Okay, effectively this can be viewed as an income tax or a percent of price deflation or availability or share inflation. Which would you rather? Decide in 2025 how much to pay in real dollars or commit to a percent of worth forever in 2017? In 2009, Bitcoin took a guess to what the worth of cryptocurrency would be in 2017. Bitcoin was the first of its kind, as many know. Based on that, he decided to commit to paying a tax of 4%. Many suggest his 2009 guess is more accurate than a guess made in 2017. I would argue otherwise. This 4% income tax has amounted to $1.6 billion for 2017, or about 8 times higher than any modern competitor. Thus, the market has concluded that with all expenses that all expenses above approximately $150 million have not been worthwhile. Litecoin pays a little bit more because they used old ASICs hardware, so it's a little different for them, but all the same. However, Bitcoin was a guess made in 2009. One final note: you can see as the price goes up, the percentage payout goes down to achieve a similar fixed dollar expense. That last bit is surprisingly hard for some to understand. Under the Bitcoin system, your total payout would have come to $19 billion annually if you just said 4%, which is what Bitcoin did. But anyways, so, or you can or an expected increase of the cost of computing power by a factor of 3,700%. Thus, any coin in 2025 would have an immediate advantage equal to the amount of waste by truing the cost. Okay, moving on. So, in short, if the valued added was limited to let's just say 300 million, and you were paying 18.8 billion, then a new competitor or a new company could come out, reduce their cost while providing the same thing, reduce their cost by $18 billion, and have a significant advantage in 2025 if you relied upon a 4%, if you just said 4% in 2025 is what Ethereum should pay for hash security, rather than a fixed dollar value. Okay, moving on. Darn it, one more thing. This is only truly applicable for Bitcoin and Ethereum. In addition to the millions of dollars in expenses above, there's an additional expense with it, which is the variable cost or transaction fees. For Bitcoin, this is approximately 4 million monthly or 48 million annually, and for Ethereum, it's about half or 2 million monthly or 24 million annually. The primary reason I include this is to remind the reader the above is always in addition to these fees. Thus, if Ethereum or Bitcoin offered 0% of the market cap to pay towards security, it would still hold a $48 million or $24 million value respectively. This is what will go into effect for Bitcoin in 2024, and this is the ideal intent of any blockchain, which is to say that 0% of the market cap is devoted to security, while transaction fees support security. The primary reason for this is that transaction fees are negotiated daily in today's dollars and worth, so Bitcoin versus computing power, or dollars versus computing power, while future market cap is relationship to cost of computing as the future market cap of a crypto coin, and its relationship to the cost of computing power is nearly impossible to surmise. Unfortunately, you must make a guess. However, and Bitcoin guessed at 4% for 2017 and 2009. Okay, that's all you need to know there. So that takes care of hash security, demands and markets. Boom, da doom, doom, doom. Okay, so but just you might say 500 million is a good number there, or a relatively high number, the highest reasonable number, whichever you prefer. Okay, just to do demands and markets again. Let's discuss price stabilization and market traded asset. Price is stabilized when the number of buyers equals the amount of sellers. To put simply, if one adds a buy order to a stable market, the price necessarily goes up. Or if one adds a sell order, the price necessarily goes down. This is 100% mathematically required, regardless of personal sentiment. That mathematics drive the market. Ooh, might be messing up again. I think I'm still doing good. Okay. Is it possible to understand or predict demand? Fortunately, under certain circumstances, it is possible to know with 100% certainty the total rate of demand. For example, May 27th, 2017, the value of Ethereum was $200. On July 14th, 2017, the value of Ethereum was again $200. Thus, over a 47-day period, we know with 100% certainty there is no net change in demand, which is to say over the course of that time period, the amount of buyers and sellers equalized at $200. Put another way, the demand to buy and the demand to sell was exactly equal to $200 on May 27th and July 14th, which would indicate that there was no net increase in demand. However, that is only half the puzzle. There was an expense incurred during that time, which was 100% paid. This money was taken from new investors and burned to pay for blockchain security. This amount of money amounts to $328 million, or $6,978,723 on a daily basis, about $7 million. In other words, we know with certainty the daily demand during that time was $7 million, which netted to zero after security allocations. If we phrase this in terms of persons with average expenditures of 5,000, we can say new investors of 5,000 during the time period averaged 1,396 daily, or monthly persons of about 41,872, and monthly dollars of 209 million, which represented the necessary new demand to create zero net change between the 200, 420, and 200 price points. Certain business persons might be asking why the price is relevant. It is relevant because, as demonstrated in the Security and Taxation tab, Ethereum expenses are set to increase linearly with price. Thus, if the price doubles, Ethereum must pay double for the same items it purchased just a month prior. As you will see, this effectively creates a price limitation, as excessive waste naturally limits an asset's worth. Ethereum is programmed to waste money with the more one wants to pay, effectively reducing the price. However, to recap, new investors supplied monthly 209 million, Ethereum spent 209 million, thus there is no net change in demand or change in the supply-demand equilibrium. Now it's your turn. During the month of June, the new demand for Ethereum accounted to approximately 42,000 persons, or 209 million. For the month of August and ongoing, what do you feel is an appropriate value for demand? I know this is a wild guess, it's mostly used for illustrative purposes, so let's just say it's roughly $42,000, the same as it was in June, which is a relatively high demand period, but all the same. Great, now keep in mind security expenses subtracted from this number, and thus if your inputs amounted to 150 million or less, and security expense was 200 million, then you could never pay for your security. So if we put an input of 42,000 people, then security must be less, we must spend less than $200 million annually, or $2.4 billion on yearly. 200 million monthly, or 2.4 billion annually in order to have a profit. So that's all this is saying here. So your revenue must exceed your cost. Okay. Then so if your numbers were 150 and 200 mil, then effectively you would place a 50. Okay, I'm going to just read this again. Thus, if your inputs amounted to 150 million for demand and your security expense was 200 million, then effectively you must place a $50 million sell order upon the market, causing a drop in price. As security expense is tied to the price, as the price drops, so does the expense, until they create equilibrium. Lastly, keep in mind that in addition to security expense, there is also holder release. Under the assumption that persons may want to sell an appreciating asset to pay for today's expenses, one should anticipate some amount of cash out in addition to the security expense. This could be 5 million to 25 million monthly, but it's something I simply want to keep in mind going forward. In the following analysis, I will arrive at price equilibriums using revenues and costs. However, I would suggest it will not truly be equalized without amounts for some amount of holder release, which one can estimate to necessarily be 5 million to 25 million monthly or thereabout. Regarding the previous calculations, This has already been taken into account as the net change has stabilized. Effectively, you could add demand and add expense to create the same net effect, but with more accurate long-term projections. This can only boost the overall pricing expectation for Ethereum. Thus, I have decided not to include it for this analysis. The above is the worst case scenario calculation. So I didn't really discuss it here, but regarding the no new net change in demand, etc., and paying for security expenses, this is pretty accurate for this period of time. But you can sort of just keep in mind that people who buy and invest in Ethereum in order to make money in the future, as the price goes down, they're less likely to sell and cash out. And then as the price goes up, then they will want to sell and cash out. Now, my charts don't really take that into account, so just keep that in mind, that maybe 5 million a month of people who've previously bought Ethereum might want to try to sell that Ethereum without creating a drop in price. And then regarding what you pay to miners, now this gets a little bit tricky, but miners are naturally investors in Ethereum as well. So as the price goes down, they hold on to they're paid in Ethereum. They would hold on to their Ethereum, cause the price go up, and then as the price goes up, they would naturally flood the market with their sells as well. So a price will have a natural tendency to not want to go up all the time as quickly as it did when the price was lower or more out of whack. But for this analysis, we're just going to say that generally speaking, new demand, the new $2 million that is required to be popped into Ethereum monthly just to pay for security expenses and not cause any increase or decrease in price, that's the primary demand we're looking at. So we're not really adjusting it based on whether the price is high or low at a given time, but giving a set of demand, how that would play into the market. I'm not going to really go into this, but this is dealing with the mining ecosystem. Let me just page down so people who want to read it can pause the video and then read all all that there. I know I wrote a little bit much. And then you got some over here too. Okay. You got this 51%. I know I'm just driving people nuts with how much material there is here, but you can just feel free to read this at your leisure. But regarding the mining ecosystem, the main thing to keep in mind here is that people get all nervous about, you know, how will reducing expenses to 80% hurt the hobbyist miner? It's not really a legitimate concern. It's definitely over isolating the viewpoint that one should have. The hobbyist miner is not the goal of Ethereum, you know, support the hobbyist miner. Okay, and then here's some historical spending that I just wanted to show you, so you can kind of see as the price goes high, the spending just gets ridiculous, or what a lot of people would call ridiculous. This is the most spent in a single month ever by any blockchain created after 2010 that's not Ethereum or Bitcoin. And this is the most spent in a single month ever, including Bitcoin. So, it's high. Ethereum was never bigger than Bitcoin, for those who don't know. Or it hasn't been yet. So, here's some napkin math. I made this. This is kind of new. I kind of like this. This helps do a lot of real simple calculations. So if you want to do 500 million in annual spending, and then you can pick a static price, and you can pick a static ETH and a rate of ETH, which is inflation percent. Most people think about it in terms of inflation percent because that's what makes sense to everyone in the world. But if you're in the programming community, they will just call you a dum-dum unless you refer to the percent that you want to pay to people in terms of ETH. And ETH does not naturally translate to a percentage, but this is how they talk. And 1 ETH equals 2.26%, okay? That's the relevant stat there. Okay. So here you go. Here is the proposal that Vitalik is making, and let's just pretend if if the amount you wanted to pay was no more than 500 million or 1 billion. Well, at the price of $200 to $300, his proposal is already paying 1.2 to 1.8 billion dollars a year. Here's the old model at 150 bucks. It was always paying 1.5 billion dollars. Ethereum would have had to drop to 120 bucks or so before it stopped paying ridiculous amounts, frankly. And that's what the price I think it would have dropped to. And then in my proposal for 1 ETH, even at prices as low as 250, it's still paying $500,000 annually. And then it supports up to a price of $700 without going over 1.3 billion. Whereas under Vitalik's proposal, we'll essentially start at 1.3 billion and then go up and then reset again and then reset again, and you know. So hard forking, hard forking, hard forking. It's not really a pleasant experience. That's why I suggest August 1st to do EIP 669, Ethereum Initiative Proposal 669, and support my 1 ETH limit, which qualifies us for this price bracket, which is nice. Under Vitalik's proposal, if you said you wanted to pay less than $1 billion a year, then Ethereum has to be below $200 to pay less than $1 billion. Under my proposal, Ethereum has to be less than $500 to pay $1 billion. And then also with my proposal, it rolls as the price goes up. So what I do is I basically cut the amount of Ethereum in half and then cut it into quarters at given intervals, which are roughly 3 months apart. So roughly, I'm expecting that if you reduce the expenses by what would have been, so at the price of $500, this is always kind of a fun one. So at the price of $500, the previous expenses would have been $5 billion. Vitalik's proposal would be $3 billion. Mine would be $1 billion. But at the price of even the price of $250, the previous expenses would be the current expenses are $2.5 billion. Vitalik's is going to reduce that by $1 billion to $1.5, and I would reduce it by $2 billion to $500 million. So the point there is, by reducing the expenses by $2 billion, you will force a buy order onto the market, an open buy, up $2 billion over the course of the next year. But effectively, from that month going on forward, you would have a humongous buy order on the market, and then you would naturally drive the price up very, 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 very quickly. In which case, I think within 1 month it would get to $500, and then I think it would get to about, I think it would get to $450 within 1 month, and then it would get to about $600 the month after that. I think it would slow down just a little bit. But in either case, within a couple of months, you'd have a price of $650 without any problem, in which case you would still be paying this $1 billion figure that people like to pay. But the issue is that doing it this way, you have no ability to grow the price without becoming grossly out of whack. Whereas doing it this way, you set in a locked-in ability to grow the price at periodic intervals, which I think is great. Okay, so that is that. But this is just a little simpler calculation, but I really think I'm just losing people with all these numbers, to be honest with you. Alright, moving on to charts and things. I've had people, they tell me this, they go, if I ignore all your math and just go on what my gut tells me, you're wrong. And these are people big up in the community. And I'm like, okay, well, you can say that about any argument anyone has ever made in history. If you always ignore everything they say, and especially if you ignore mathematics, then you can pretty much be right on anything you want to be right on. But whatever. it's sad that some people are so addicted to wanting to be right that this is the way they view things. But mathematics still exists for us. So, all right. So now let's just say Ethereum experienced a 25% reduction in demand. I'm going to say that here. And then let's just say that, what is this here? Okay, so this is $50 million of new demand each month rather than 200 million. So 25% of whatever it was. And then let's just say the price of ETH now is $150. So let's review our charts. So at a price of $150 with a significant drop in demand, Ethereum cannot sustain a price above 150 even. At 3 ETH, it can't sustain a price above 150, which, I mean, that's just sad. And then at 1 ETH, it can sustain a price around $300. This is the sustainability point right there, or maybe a little bit to the left here. And then with the rolling ETH, this is the plan that I do, where you reduce the ETH periodically over time. It can actually sustain a price for a very long time, whereas it caps out around $350 under the permanent 1 ETH forever. Mine, as it rolls, it does not cap out. It caps out around $2,000, around $2,000. Okay, and anytime it does not go up, there's a big demand, a big buy order placed onto the market. So if the ETH is at $180, even at 1/4 of the rate of new customers as it is today, there's a $20 million buy order placed onto the market at the way I decided to do it. Now, if you say the demand for ETH is approximately what it was in June, now let's look, see how we do. Okay, so here, at the current rate, then ETH will stabilize around $220. And you could say it's somewhere between 180 and maybe 350 is where you might see ETH at that price, at 5 ETH. But now with the exact same demand at 3 ETH, instead of seeing ranges between 180 and 350, at the exact same demand, you'll start to see ranges in price between 260 and 550. Fantastic, right? You get a $200 price bump just by dropping the cost $1 billion. Who would have thought that could be possible? Pretty much everybody, but there you go. And then at 1 ETH, your ranges of demand go from roughly $900 to $1,700. So fantastic, $900 to $1,700. Woo-hoo-hoo. But that's 1 ETH, and that's keeping an expense at still a relatively high point compared to any other blockchain that was created after 2010. Only blockchains created before that actually pay more. And then using a rolling ETH, which is what we should do. Using a rolling ETH, then at every single price point with no change in demand, there is no permanent point where ETH cannot cross over that price. So at every single price point, there is a minimum open buy order placed onto the market every single month of $100 million. Now, if we look at these graphs here, you can see that the cost to protect the system never falls below 22 million in one single month, or an average of approximately what Litecoin pays, and then consistently it's around $40 million. Okay, but one thing to consider is that this is under the assumption that while ETH goes escalating in prices through the moon, as people say, there's no increased interest or desire to participate in ETH. And then if ETH actually becomes more popular, If it actually becomes more popular, then it stabilizes around the $18,000 price point. This doesn't even go up to an $18,000 price point, but if it becomes more popular, then it stabilizes around an $18,000 price point. And you start to see that the securities expenses, granted, they go off the charts here, and it becomes outlandish at some points, but it's going to be quite high. Now, what you can also do in these graphs is you can go down here, go to the little number tabs here. Let's see if I can get them bigger. Okay, get to these little number tabs here, and you can get the exact amount of the market buy order that would be forced onto the market at given amounts of dollars in new demand each month. So in this situation, under the declining tab, I'm saying there's $61,000 of demand right here. Yeah, there's 61,000, and you're still 61 million, and you're still doing quite well. But there's a sell order popped onto the market, and then under this one here, optimal. Okay, yeah, there's the market buy. Okay, yeah. So even at, in this wild situation, even at is that pricing? No, that can't be. Okay, even at a price of $33,000 with demand of 500 million a month, so about double what we have today. So if there was demand of 500 million a month, double what we have today, and had the price of ETH gone up substantially to $33,000, rather than pay what would be required to be paid under a linear model, you would still actually have a buy order popped onto the market of $151 million. Which is to say that costs are below revenues, or revenues exceed costs. So that's that. And then if you say, let's just go ahead and say, let's just pretend you announce that ETH has the lowest percent inflation in the world. It has 1 ETH, that's 1 ETH per block, or 2.2%. It effectively would have the lowest. It's less than gold. It is less than Bitcoin by half. It's less than any governmental currency, the US dollar, etc. There's nothing in the world with less inflation or less overhead than ETH to manage your financial investments, and nothing will have less inflation. So, 2.2%, yeah, it may be questionable some of that, but you half it every few months after that, which is what I would do, and then you get down less than 1% within 6 months after you start the process. But moving on. So if a demand doubled, at the current price, with double demand, we can sustain a price of $440. I want to tell you, that's with absolutely double demand perpetually every single month. The maximum it can sustain is $440 at the current expense outputs. But it would range between 240 and maybe up to 1,400 if you got super lucky. And then under Vitalik's proposal, it would go to a maximum of $700, and it would fluctuate between 400 and 1,600, something like that. And then under 1 ETH, what I recommend, it would go up to, it could sustain a price up to about $1,900, and it would fluctuate between maybe $1,900 and $4,000, somewhere in there, between $1,900 and $4,000. Okay, and then under the rolling ETH model, under double the demand, which is frankly, this is what I anticipate. I don't see any freaking way you can have anything less than double demand. Once you declare that you're the cheapest thing in history, I'm just gonna increase the price substantially. Let's just leave it at 250. That's fine. I just wanted to get these numbers a little higher here. But so even at the price point of 250, you'd have a $300 million buy order put onto the market, which would probably increase it well over 300. But let's just pretend monthly it goes up linearly. Essentially. Then you'd have the minimum cost of $40 million, and you would have up to some high values, but a minimum 40 million monthly. Even at this rolling incredibly low amount of percent of inflation, or percent of ETHs paid to support your hash security, which is only one form of security. It is not the only thing. Thus, paying outrageous dollar figures is not a good idea for it. But now, also, I'll do one last thing, which is kind of interesting. I know I'm going long here. Whatever. We're having fun, right? Okay. I correct myself up. All right. So now, so these pricing points are kind of fixed in my little system. But let's just go ahead, and I will just quickly now take some wild guesses on probably some a little bit more accurate pricing figures for you guys. So just so you can see how these numbers kind of like play out under different circumstances. So here's one. Okay, I'm gonna take this here and put this here. Okay, great. Great. Okay, great. So, okay, good. So, in this situation, with a domain level, I'm going to say a domain level that you become the most interesting man in the world, and your demand increases 50%. So not really that much, I don't think. Not a very big stretch of imagination to say that you're the most interesting man in the world and your demand increases 50%. So under such a situation, during the month of August, you'd place a $236 million buy order upon the market. Now, the ETH market, for those who don't know, it's roughly 700 million monthly. So you're essentially saying that you're going to buy 2/3 or 1/3 of all ETH that's traded at market, which effectively will drive up the price. So instead of a price of maybe 350 or so, we're going to say that makes it a price of instead of increasing it $50, we're going to say it probably increases it to 450, and then it'll go up again to something like 600, and then 900, and then 1200, 1500. This is roughly the rate of price increase, but it would go up a lot more at this point, frankly, because now at this point people would start to figure out the game plan, that there is essentially no way to stop the price of ETH, from going up to astronomical figures. So we're just going to take these numbers right here, and let's just pop them in. And I want you to see these market buy orders. So before, they're all around 200 million. Okay, now this is a little bit more realistic numbers, but you see how it's like kind of jumping up. But even here, you got a $222 million market buy order on the system. And you see how it kind of changes around just a little bit here. But the expenditure, this is the good thing. I think it's a good thing. The expenditure will actually become a very flat looking mechanism, because in the real market, which I don't represent here because I'm just I just threw out some numbers, just to see price points, essentially just to do price point testing. But in the real market, the revenue will remain fairly consistent. It'll go down just slightly as the price escalates to moon levels, and then it'll jump back up again as people become insanely interested in ETH. But in either case, as the cost goes down, then the price will naturally go up faster, and then as the expense climbs back up, the price will go down slower. So you'll see these little a little bit more of a up and down kind of mechanism. But now let's just pretend, for talking purposes, ETH was to never increase in price again. Some people say this to me. They say, what if you put a $250 million buy order upon the market and ETH never increases in value, even when you do that? Well, under my little system here, you see just briefly here, but under my little system here, the buy order on the market actually increases every 3 months a new amount of money. Now, our security spending it's not really as high as we'd like it to be. But I want you to consider like these kind of wild scenarios that people are talking about, where they're suggesting that putting $250 million buy order on the market will, in a single month, would have no upward drive of the price. That's simply not true. And then what else was I thinking? Well, anyways, yeah. So that's just simply not true. So it will create the expense will stabilize. You'll find that the price is a lot more dictated by the expense rather than, let's say, the oh, it's just doing its thing now. That's okay. So all right, and then so that's at 300, and let's just pretend it was wacky for a second, and it just jumped up a lot to $1,200 like right away, which is just out of bounds for any other ETH system. You know, well, the expense gets too high. If it jumps up immediately that high, the expense would get too high. But in the third month, it would be in a tolerable range. And then you'd see how this buy order goes down as the value of ETH goes up, creating the expense, etc., etc. But this is at a $1,200 price immediately, whereas the current model, if you go up to $1,200, it's off the charts. But you'd have a $500 million sell order placed onto the market if ETH was worth $1,200 today, with the same demand I'm showing you down there, which is a rate of demand of 50% more than today. So even if demand was 50% more than today, then at a rate of $1,200, you would, at a price of $1,200, you would have to. So when you look at these things, you can sort of think about the holders, right? This is effectively the holders. So in order for ETH to not decline in price at $1,000, then holders need to come up with USD money of 700 million, buy all that ETH at exactly this price point, and do that again every single month in order to sustain a price here, as the natural demand will not do it. But what you want to do is plan for holders to sell some of their ETH each month. And in this situation, I'm planning for them to sell 200 million, 100 million. I call these my ETH millionaires. You'd be making 100 millionaires, ETH millionaires every single month. This is them not holding on to their ETH for all of eternity. It's for them holding on to ETH for 1 month. For 1 month. I know, granted. Let's just holding. You shouldn't be rewarded for holding on to assets for a month, but there you are. And you shouldn't also be rewarded for trading without understanding the fundamentals, but there you are. We're in shared economy. Everybody takes care of everybody, right? So here you go. This would be making 200 ETH millionaires that in the month of August, another 200 the next month, another 200 ETH millionaires the following month, another 200 million, 200 ETH millionaires every single month for roughly the next 2 years. And that's going to assume that while doing that, demand doesn't really increase substantially over that time. This is the current demand, so let's just see what it is under current demand levels. So yeah, this is if interest in ETH never increases. You'd be making 100 ETH millionaires every single month, allowing them to cash out their ETH without creating a downward pressure on the price, up to price points of $11,000. Now, $11,000 for ETH, for those who aren't looking at the $1 trillion market cap, it's currently about 30 billion. But it's roughly $12,000 per ETH creates the $1 trillion market cap for ETH. I don't know. $1 trillion market cap sounds cool. And it does get a little bit outlandish in terms of my costs. But at this point, once you're the world planetary currency, which, at $1 trillion, you're approaching those levels. this cost is, it kind of should go up at that point. Now, for those curious, Casper will effectively eliminate those costs, and Casper will take this down to 0, but that might not be for another couple years. So that's my financial presentation on understanding blockchain profit and loss and analysis. I hope you got to see some different rates of demands and how that impacts the ETH price and price stability points. And then at the current levels of demand, ETH just mathematically cannot sustain prices above roughly $250. And then under Vitalik's proposal, it will not mathematically sustain a price no higher than $700 at most. But even at the $250 range, you're going to have some downward pressure on the ETH. With my proposal, it will sustain a price up to, but I would say no less than $1,000 or more. And then with the rolling ETH, which is, I mean, this is my real proposal, it can sustain a price forever. And then an escalation price forever. And this is what should truly happen. And the way you achieve that, and the reason that no one has done this so far, one, people copying Bitcoin. I get you, people. It's 2017. Bitcoin was 8 years ago. You don't look for him for tips today, all right? But all the same. So people copy the Bitcoin. And so this is why you have not had anyone just, instead of allowing this number to just escalate infinitely, try to keep this number fixed at roughly 500 million to $1 billion. And if it goes over $1 billion and you have the option to do a hard fork, force a hard forks, which we're doing through the time bomb code, Ethereum August 1st, then this is what you do. Okay, hope you liked that video. I know it's long. All right, have a good one. Bye. Oh, and support the freaking proposal, people. Get active in the community. Support the proposal. Is it in this historical information from napkin math? Yes. Go here. Go to github.com/ethereum/EIPS/pull/669. Find KY Barnett and thumbs up his proposal, and everyone in the world will be happy for what you did and what we did here today. And we will establish the world planetary currency. We will. It's just the way it would happen if the proposal was adopted. And from there, human history can now move on to the next stage. Money will be done. Money will be solved. All right. That's not enough motivation for you people. I don't know what is.